Hello, everybody. Two for day. Happy birthday, T&D Tesla. Thank you for all you do in the community. This is OCTA. It is Tuesday, and we're going to talk about, is the Bitcoin halving priced in? Because a lot of people think it is. I'll show you it is not. And let's jump in. We're going to take a big tour of the world, touch on a little bit of Bitcoin, a little bit of on-chain, a little bit of crypto, developer activity by all the top chains, a very important thing that I look at. We've got an updated report for you all as well. It shows you exactly where the action is. Quick touch on congestion, the miner hash wars, who owns all the gas stations, how the world is changing in this new digital era, and so much more. Thank you all for coming. Let's go. And of course, none of this is ever any investment advice. But I'm going to start off by one thing. We have a little post here. Pale Blue Dot says, joined Patreon recently. You've been a great help in me focusing and tidying up my investments and organize for the year ahead. Excellent, because less is more in investing. If you have a whole bunch of stuff, as Warren Buffett would say, it means you don't know what you're doing. Be very targeted. Go for the jugular, as they say. Now we're going to start with the ugly news. First of all, shout out to Benny Mortezia. He has identified 536 imposters of me across different places, etc. By the way, my Twitter account is pretty easy to find. It's 200,000 followers with a little blue check mark. That's the only place I am, and I will never DM you. Okay? If you ever get a message from me, it's not me. I promise you that, because I don't have the time to DM anybody. And Super Soul Man, thank you for coming. So just remember, be careful out there. The scammers are going for your bags. They're pretending to be me. They're not. Ever. Promise you that. Next, big unlocks. We have some crazy big unlocks coming in store for us over the next 7 days. EULA, that thing just dumps all the time. We see Aptos is there again. Cyber is there again. Starknet is there again with big dumps. You can pause this and check out yourself. Arbitrum. And Render's on the list too. I do own Render, but it's a tiny 0.2% unlock, so it's not that big. Axie Infinity, another 7.8% unlock. ApeCoin, that just unlocks all the time. So you'd want to be a bit of a... And I love apes. But you don't ever want to ape into ApeCoin. Ladies and gentlemen, that's the unlock stuff. And shout out to the team in Switzerland. They put together a nice little piece about how central bank digital currencies could destabilize finance. This is from the Swiss National Bank chairman. Says there's no need for a public CBDC due to already efficient payment rails, payment methods, banking in the private sector, etc., arguing that a retail central bank digital currency could disrupt the traditional financial system, i.e. disrupt banks, which is very interesting. So shout out to the Swiss banks. And we know, we'll talk a bit at the very end of this video about how everything is changing and how governments are getting desperate. So stay tuned for that. A little bit of crypto macro stuff coming in. Now, the bad news, got out of the ugly news pretty quick. This is kind of big profits. You make you think that should be in the good news category, but let me explain why. This is the amount of profits that are made by some of the biggest banks in the United States. JP Morgan, by the way, net interest income. The numbers are so big, it's kind of scary. Bank of America, Citibank, Wells. And the thing is, and this is what people don't understand, these guys are pocketing all the interest income that they are getting from your deposits, and the government is paying them that interest. And they are not paying that interest to you. It's unbelievable. The government's blowing up their deficits, and these banksters are the ones making all the money. Congratulations to the big banks, big profits, bringing and exploding the debt for the country as they line their pockets. And it's such a simple thing to see and view, and nobody complains about it. It's like, it's just the normal way that the world is, and in my small brain, I can't figure it out. Now, shrinkflation is also hitting the housing market. Again, this is bizarre. First of all, housing affordability continues to hit record lows as prices rise along with rates, but home builders, now their solution is simply to build smaller homes, with the average new home about 2,200 square feet. That's down over 100 square feet in just 1 year, and 250 square feet. By the way, the easy way to think about square feet is like 2,200 square feet is about 220 square meters, and it's falling by 10 square meters a year in size. And it's fallen by 25 square meters since 2016, 250 square feet. And the new reality is people are paying more to get less with all goods and services, and now that includes housing too. But US houses are pretty big anyway compared to some European houses, but at the same time, that's kind of staggering. Now, then we have the CPI nonsense. I won't spend much time on this at all, but all you need to know is forget the numbers. The government can't count. Trueflation has the real numbers. The government doesn't. And the government also doesn't control inflation. 40% of inflation is driven by the price of oil. And oil is now $85 a gallon, heading to $90, or a barrel, not a gallon, barrel. So forget the CPI stuff, but that rattles the markets. Now, time for the good news. As I mentioned before, 10 days to the halving. Bonkers close. Only one more OCTA until the halving, which is cool. And some crypto stats so far over the last 25 weeks. Call that half a year, 6 months. You can see the market cap has more than doubled in 6 months. Okay, the users have gone from 5.6 million users to nearly 10 million users across all the chains in the past 24 hours, which is awesome. Remember, one of the things we want to get to is the path to 1 billion crypto users in a month. This is 10 million in a day. We're not far. You know, things can go exponential real fast, and things are changing very fast too. Transactions from 40 million up to 70 million. By the way, last week it was 80 million. And last week, the total crypto market cap was 2.6 trillion. Now it's 2.69. So despite what people might be feeling, it actually was a good week. You may not notice it though. Let's look at money flow. Money also flew into the space as well. Digital asset investment products saw continued positive sentiment, pulling in about 646 million last week. And inflows to date, $14 billion, which is kind of nice. In terms of the specific assets, excuse my crude lines, Bitcoin, 663 million. Ethereum, still bleeding, down 22.5 million. Year-to-date flows are still positive for Ethereum, but for such an asset, it's been staggering how bad it's been performing. Solana up 4 million, Litecoin up 4.4 million, and the rest is kind of crumbs that isn't really worth mentioning. So that's the money flow. Fear and greed at 80. Last week it was 79, so extreme greed still. Bitcoin monthly returns. It's a bit sad so far, but I did promise you a good month of April, and you're going to get that. But still, so far, the month of April, we are down 3%. But that will be fixed in very short order. Remember, 10 days to go, and we're going to talk about is the halving priced in. Let's look at the last 7 days performance divided by Bitcoin. TON, the big winner. Binance up. XRP up as well. Near Protocol had a very good week. The rest of the stuff, ETH down 5%, Sol down 2%, Cardano down about 2%, Avalanche and Aptos down hard. Not sure why, but anyway, in terms of dollars, you can see a slight dip. So Bitcoin down 3.7% for the week, ETH 4.5%, but TON up a huge 27%. And interestingly enough, TON actually pushed Cardano out of the top 10 cryptos, where it's been for the longest time. Now Cardano's number 11, and it will continue in that trajectory because of fundamentals that we look at here. Not for any other reason, but we'll see if we're right. Now, let's get on to the Bitcoin halving story. 30 days before and after the halving, a cool little chart from Keiko. And of course, many investors are concerned with short-term performance, and it boggles my mind. Literally, the price of Bitcoin was where it was 2 days ago, and people are losing their minds. As a really cool little meme on Twitter, it's like a picture of a cat looking at a chart like this, and there's a tiny little wick down. That's exactly what we have today. But we have to zoom out and look at the big picture here. All right. So this is 30 days before the halving and 30 days after. Now, 2016 did have a bit of a hiccup after the halving and it was down, but that was due to a macroeconomic sting about 20 days after the halving, not because of Bitcoin. And we could get that again. But the point is, after the halving, Bitcoin does very well. It also does very well before the halving. We know over the last 20 days, we've seen new all-time highs. We've also seen some big dumpage. And the most amazing thing is massive dumpage by Grayscale. A ton, nearly $5 billion worth of Bitcoin dumped in the last 30 days. And yet the Bitcoin price still is very close to all-time highs. That is important to take in mind. Now, zooming into this, it's a bit of a, they should have expanded this out a little bit, but they are the returns, and the returns will be positive 30 days after. But there's another window of time that's also very interesting. 9 months after the halving. Why is that important? Not only is it a human gestation period, but it's where all the action typically happens. So if you go back to 2012, with the exception of 2012, of course, that was crazy. But remember, Bitcoin went from $3 to like $100 or something in a very short window of time. 2016, 1 year, within 1 year, added 300%. Within 9 months, 85%. Last cycle, 1 year, 542%. But within 9 months, 430%. So the point is, between now and Christmas, that's where probably the majority of the Bitcoin price action will happen. Now, we do know that because of the ETFs and because of the ETFs that are coming all over the world, Australia, Brazil, Vietnam, Hong Kong, representing China, and all the other places, they are going to suck in a lot of dollars and buy a lot of Bitcoin. It's going to be incredible. So we might have a great year after the halving as well. So bear that in mind. And this never gets old. It's another rendition from NYDIG of exactly what happens. Now, the current cycle, little purple ring there in the middle, so you can see it, is where we are. And the rest are the historical charts of what happens after the halving. And the answer is Bitcoin goes up. Okay? And that is if the patterns hold, but this time is different because we have less supply, we have diminishing liquid supply, we have more money coming in, we have an official asset class, and if we take an average of all of these going forward, Bitcoin could reach $450,000 a year from now, or $270,000 if the cycle turns out to be more like 2016. Or if we applied the low to high patterns in the table below, we could reach 350K. And if we go completely crazy, 1.8 million. So, I mean, it's no matter what way you skin it, things are going to be very exciting. So stay healthy, my friends. That's the advice. Now, we have had this sideways chop under the all-time high, but we're so close to the all-time high. And fireworks are coming soon, per Bitcoin Magazine Pro. Not just me. A lot of good stuff happening. And a lot of people are saying stuff like, the comments are, oh God, I'm so upset with Grayscale and BlackRock and all this type of... Well, first of all, Grayscale, yeah, there was a lot of shenanigans played for a long time, but they did bring a lot of money into the Bitcoin space, despite the fact that most of them were speculators. But BlackRock and these ETFs have completely changed the game. If there were no ETFs approved, I guarantee you the Bitcoin price would not be above $40,000, $42,000. We are $30,000 higher because of these ETFs. And trust me, I analyze them every single day. So for those who say, oh, I don't like BlackRock being in this space and everything else, it means, well, would you be happier with the Bitcoin prices $30,000 cheaper? You gotta look at this. The money coming into the space is actually good. It doesn't matter where it comes from, as long as they don't play any funny games. But what's crazy here is BlackRock and Fidelity's two spot Bitcoin ETFs have set a record among the top ETFs for the longest streak of continuous inflows. And they have also outperformed 99.9% of all ETFs since their inception 59 days ago. and their success is attributed to the growing institutional interest in crypto and Bitcoin, inflation concerns, the search for alpha, the search for alternative investments, yada, yada, yada. It is insane. I think BlackRock now has over 15 billion in it, and Fidelity has over 10 billion in it. These two are big, okay? Again, over 25 billion in 2 ETFs. When this article was written, I think it was 59 days. Now it's 60 days. Tomorrow will be 61 days. We are going to completely smoke $50 billion in inflows this year, which is way beyond my wildest dreams when I started analyzing this late last year. I never thought 50 billion. 50 billion was like my Super Bowl target. We're way over halfway there in 60 days. It's bonkers. Anyway, let's talk about how these ETFs are actually changing the game in terms of some on-chain stuff from the team at Glassnode. Here you see new investors are joining the market, and in simple terms, for every investor who sells their coins for profit, there's another one buying them, often at a higher price. And this trend can be seen by looking at how much the Bitcoin market is owned by coins that are less than 6 months old. I think they have 155 days as a key metric as well for them. And during the last two big market upswings, up to 95% of the Bitcoin wealth was held by these new investors, because the old guard tend to sell close to the top. But since the start of 2023, the number of new investors has increased significantly from 20% to 47%. And I think this is all attributable to the ETFs. So again, the ETFs are changing the game. They are bringing a lot of money in very, very quickly. And spot volume is also rebounding as well. This wasn't the same case 3 or 4 months ago. And this is kind of like the buy side versus sell side volume. And this is a tool that Glassnode have to identify spot cumulative volume, delta CVD, they call it. And this metric shows you the net bias in the market taker buy versus sell volume measured in USD. And again, a ton of spot buying is happening all this year, all attributed to the ETFs, because retail was not on board up until very recently, looking at on-chain data as well. Okay, switching gears, talk about altcoin. We're at AltSeason. We're at 45. Last week was 47. The performers over the last 90 days, Bitcoin is bang in the middle, 48.2% gain in 90 days. Not bad, but it's funny, if you look at the bottom performers, you got Monero, Injective, Optimism, Lido, Arbitrum. Many of them suffer from bad token inflation, which keeps the price down. That's why we look at that very heavily here. And on the left side, we have the meme coin revolution that's happening as well. The WIF and the Pepe's doing very well, but at the same time, other layer ones are doing very well too. Phantom is up there, Doge, Render, Near Protocol, Binance, Solana, Mint, Maker, Uniswap, Stacks have all outperformed Bitcoin. So it's been an interesting time. Now I'm going to switch gears. I'm going to spend some time talking about developers and development activity, because it's so critical. I always say, follow the developers, follow the money. Follow the development activity. Not in all cases does it result in good performance, because sometimes developers could be building the wrong stuff. But let's dig into this. This is one of our reports from our SCP profiler. Big shout out to the development team that keep this thing alive and well, plug in all the APIs to all the different systems to make it real time, and maintain those APIs. So it is a large amount of effort. But from a development perspective here, the number of repositories and sub-ecosystems indicates a few things. People always get confused by this. So first of all, community and developer engagement. A high number of repositories can suggest a robust and active developer community. And the more developers, the more resilient the platform and the more innovative the ecosystem. Also, growth potential. A significant number of sub-ecosystems indicates the growth potential of a platform, as it shows active use and expansion. Then there's another interesting thing too. You got to balance this stuff out. Maturity. Established platforms typically have more repositories and sub-ecosystems, which can indicate the level of maturity and stability. If you look at Ethereum, they have a ton. They have 125,000 repositories. Compare that to Cardano, a fraction of that. But Ethereum is a lot more complex, a lot bigger. a lot more capable. Then you have innovation. The emerging technologies or new improvements in blockchain space might be reflected in an increase in the number of repositories and sub-ecosystems too. An investment focus too is very important. That's why I look at this a lot. For investors, a vibrant ecosystem can be a sign of a healthy platform with great long-term potential. Now, the top three here you see is ETH, number 1, number 2, Solana, and number 3 is Matic, 4 is Polkadot, 5 is Near. Polkadot has been very confusing for me for a long time because they have a ton of developers, a ton of activity, but not a lot of traction. So the question is, what are they developing and why are they not getting traction? So just want to share that with you all. Again, it's one of the main things. You follow the money, you follow the users, you follow the developers, and that helps you identify winners early. Okay? If you have something with not a lot of development activity, be careful. Also be careful of the reports you read, because many reports are created by bag holders who are biased, and they won't give you the right information. They'll say, oh, our chain has the largest number of developers. Yeah, no. Be careful what you read. Be careful who you trust as well. Now, let's look at some Bitcoin Nasdaq correlation. Bitcoin over the last 90 days up 41.94% per this chart. Or should I say since January 15. And the QQQ up 11.65%. Now, breaking down another interesting thing, one of the top use cases for crypto is payments. And there's been a radical development in the area of payments for chains. Okay, this is a cool chart from a firm called Bernstein. And what they looked at recently is they looked at stablecoin metrics and the battle for blockchain payments, which I have always maintained it is the top use case for crypto. Moving money fast, frictionlessly. And Solana is the red, and they are now the leading player for blockchain payments. And the big change in the cycle has seen their dominant share, 43%, the highest share of anybody out there. And that is a radical change from where they came from. Just as recently as September last year, 2023, they weren't even the player. It was all other players. I can't make out those colors. I don't know which one's which. Tron, I think, was big, and Ethereum was big. But it just shows you how fast this whole space can change. Crypto is very fickle. Crypto is not loyal. People will go to the best, cheapest, fastest solution all the time. And somebody said yesterday, why do you talk about Solana all the time? Because people ask me to talk about it, and 2, because it's the consensus trade. I talk about stuff where money can be made. I don't talk about stuff where you can lose money, because that would not be good for the audience. I hope people understand that. Next, speaking of Solana, Congestion. Despite the congestion over the last week, $40 million was bridged to Solana from other chains, mostly Ethereum. So yes, there is congestion, but yes, transactions are still happening and a lot of money is still moving into the black hole. And shout out to Base, which is the proprietary layer 2 from Coinbase. It's not a token you can buy, so don't buy a fake Base out there. But a couple of things are interesting about this from Jesse Pollack is the TVL is now 4 billion, which is good. It also ranks to be the 3rd largest out there. And they are doing a ton of transactions, 3 million transactions in a day. But remember, they're only running at 34 TPS, whereas Solana is running at 1900 TPS. So despite it doing very well and doing a lot of transactions, I think it's only supporting 400,000 users. But those users are busy doing 3 million transactions. This thing is firing along at full speed. But 34 TPS is not going to cut it. What's also interesting about Base, it has destroyed all the other layer 2s. Matic, Arbitrum, Optimism, etc. And it came out from obscurity. And that's, again, crypto is fickle. Make sure you're in the right place at the right time because things can change. And do not hold things long term because odds are the world will be different tomorrow. Okay, now, fixes. Permert, friend of the channel, who's been on a couple of times. A lot of patches are coming in Solana 1.18. All the teams, all the community, all the developers are working around the clock to make sure this is released in 6 days. And the fixes will land and make it a much more robust chain as well. Also, if you want a recap of all these videos, it's 10 cents a day on Substack. It's also worth subscribing for free because you get sometimes a lot of the stuff that I write is always for free anyway, and the stuff that the community writers put together, you can at least read the most important parts up front, so it's worth it even for free. Now, stock market over the last 7 days, you can see here, unusual, all the big tech names are up in green, but Nvidia was down 5%. TSM was up. Normally TSM and Nvidia go hand in hand. Great week so far for Tesla, up 6%, and it's up more in after hours right now as we speak, despite very good production, but not very good delivery of vehicles in Q1. We know earnings will be rough, but I expect they may have a surprise up their sleeve. But remember, markets are forward-looking, and we'll talk about them in a little bit as well. Meta up 3%, Google 1%, Apple 0.15%, Microsoft 0.79%. And I get a lot of questions. Is Google worth buying right now? We'll answer that in a minute too. Now, speaking of miners, everybody's worried about Bitcoin miners. What's going on? Well, hash wars are going on. This is the aggressive miner hash growth across some of the top players: Marathon, CleanSpark, Riot, and Cypher. And this is from the Powerful RV. Hope I pronounced that correct. But you can see here the public Bitcoin miners, especially Marathon and CleanSpark, are aggressively expanding their hash. CleanSpark has gone from 6 exahash to 16.4. Actually, per my numbers, they're 17 already. And Marathon have gone from 11.5 to 27.8. What's also very interesting too as well, you could argue that Marathon have nearly twice the hash that CleanSpark do, but they mint almost the same amount of Bitcoin. And everybody asks me, why is that? And the answer is because on average, CleanSpark has more modern rigs. And if you have older rigs, they're not as able to churn out as much Bitcoin. So that's the simple way to think about it. But what's interesting as well about this is everybody's worried about the halving. Block rewards will go from 900 Bitcoin a day down to 450. And that's going to put on pressure on miners. And everybody's very fearful of what will happen to the miners after the halving. And rightly so. The miners that are inefficient and not prepared and not growing their hash like crazy with the latest and greatest rigs with a very cheap cost of energy and very low SG&A are not going to make it probably. Those that can will take most. And that's just the way of the world. Excuse me. So be on the winners. Be on the leanest and meanest miners that are out there. Also, this is super interesting. People say, oh my God, Tesla bought a ton of H100s. Are they getting into Bitcoin mining? No. They use this for compute, for their robots on wheels called cars and Optimus and Grok AI and everything else. But literally 6 months ago, I think Tesla had less than a fifth of the H100s that Meta Facebook has. Now, in terms of the private cloud, Tesla already have more H100s than Meta. Okay, because the public cloud is the orange, but the private cloud is what matters. And remember, recently, I mentioned about 2 weeks ago, Elon Musk came out and said we're no longer compute constrained. That's why they bought a truckload of these things. And one of Elon's companies called XAI believes it'll be better than ChatGPT 4 coming in about 6 or 8 weeks as well. So again, just like Bitcoin mining, AI is also a compute race. The more compute you have, the better off you will be. As long as you got something to compute on, like a real world AGI problem, which Tesla has as well. Speaking of Tesla too, who owns the gas stations of the future? It was interesting to see Bloomberg coming out with a very complimentary article. And what's hilarious about this is, if you know him very well, that's Jim Farley, the CEO of Ford. Imagine being the CEO of Ford, driving your electric Ford Mustang and having to go up to a Tesla charger. I mean, it'd be like you making food, but having to eat somebody else's food, or you owning your own bar, but having to go buy drinks at somebody else's bar. It just, again, in my simple mind, it just seems wrong, but this is what's happening. So the question is, who will own all the gas stations in the future? And the answer is nobody can touch the Tesla supercharger network. And the brand and the feeling that you'd have in another car, having to put your hand on a Tesla product, watch a whole bunch of other Teslas around you. it's gonna be awkward. But that's the domination. That's the 12th line. I don't even include charging as one of the lines, but the 11 of the main business lines. But Bloomberg came out and said it could be a huge business by 2030. They now have 57,000 superchargers globally. They'll be growing that to, we don't know, maybe 180,000 by 2030. Probably more, because they are adding thousands every single week, sometimes very many a day. And if you calculate the actual money of charging revenue at, say, 40 cents per kilowatt hour, assuming that each charger delivered 200 kilowatt hours a day, I think they do a lot more than that, by the way, they estimate they could easily get, $2 billion worth of charging revenue last year. And with the revenue profit margin on that, it could be a very substantial business. So shout out to Bloomberg for sharing some truth. I guess it happens. Who knows? Now, Google, Amazon, Microsoft. This is a key area. This is all cloud services, which is a huge chunk of the Amazon and Microsoft business, and was supposed to be a huge chunk of the Google business. But you can see that the heavyweight is still Amazon AWS. Microsoft, very close to being number 2. And Google is not growing their market share. And GCP, which is the Google Cloud Platform, they had plans for that, and it's not taking off. So the question is, Google still remains, YouTube, search, etc. And this part of the business has not done well. And Google have been historically very poor in what I call the enterprise side of the house. But the interesting news about this is not only are Microsoft the biggest company in the world today, but they are going to invest $3 billion in data centers in Japan next year. And that's the biggest investment in the country. And why are they doing that? Well, they also want to have local centers to drive artificial intelligence compute. Same thing that Tesla XAI is doing in London. They're setting up a AI center in London too. So again, all those machines need to be kind of close for the type of service required, or else you lose, I can't remember what it is, it's like a millisecond every X number of miles. So if you've got to go from, say, Europe to the US to get your compute, it's just too slow. Anyhow, global liquidity is perking up a little bit. It's like $20 billion, not a lot. Probably fueled by China. But remember, liquidity is hitting the markets. You just don't see it because of the Cantillon effect. The money is going to the banks, etc., like we showed earlier. Not into your pocket just yet. But a lot of money will be printed by China. They've said that going forward. And finally, a little topic that I thought was very interesting this week that I thought it would be worthwhile just spending 60 seconds on. KPM, Knowledge Every Minute. Preston Byrne, he wrote this. It's very funny. And it's exactly what went down. Brazil says to Elon, censor these dudes on X. Elon says, LOL, no. Brazil says, fine, we'll censor our internet so no one can access your service. And Elon says, I has more satellites than you. Censor this. And what Tour de Meester said was, we are witnessing a transition from geographic power to digital power. In a decade or two, Bitcoiners will rule the cyberspace waves and widely employ censorship thwarting strategies to project power in the world. And of course, we know people that have been talking about this for a long time, like Jason Lowry and others. And my comment was on this, I retweeted this, I said, the world's sprinting towards digitization and it's unstoppable and governments can do nothing about it. So remember, education for all, have your own Bitcoin, have your go bag. It's time for less government interference and increased liberty and more truth. And with that, everybody, thanks for coming. Hit the like. Thank you for being here. Thank you so much as well. We just saw it. I'm your Huckleberry and Super Soul Man for coming. Wish everybody a good Tuesday. Hope that wasn't too long today. A lot of news to cover, and we got it done 30 minutes. Awesome. And I hope you leave here armed with a little bit more intelligence. But the future's bright. But make sure you blaze your own trail. Thanks, everybody. Have a good night.